The U.S. Trade Representative called the Phase 1 trade deal finalization historic. But is it? Wall Street seems to be confused. Well, let's drill down with Bob Brusca. He's the chief economist at Fact and Opinion Economics. So we finally seem to be getting the finalization of the the Phase 1 trade deal between U.S. and China. What is there not to like about what we're hearing?
Well, if you want to be cynical, there are probably a lot of things you can not like. There's a lot of details we don't know. And so you could be skeptical that there's really going to be anything to them. But this is how trade deals work. There are a few things that we know about. And I think the deal represents some progress. You know, the president gave China some tariff cuts. He kept some in place. He's getting some progress on China buying American goods, apparently a slug of agricultural goods, although there's not really a very firm number on that, and other things. And there's going to be progress on a lot of these things that the president wanted: technology transfer and financial services firms and China's behavior in the exchange markets and a number of things like that. So,
but what about the market reaction? I've gone through my emails, including an email from you, and it seemed like there's a lot of skepticism about some of the details that are not necessarily clear. There's like a lack of clarity. One of them, you talked about concerns about China's industrial subsidies, that this still doesn't address that, and the whole idea of the state-owned enterprises.
Right, well, that's going to be a phase 2 problem because that's a more nettlesome thing. So they did take some of the stickier issues and push them off into phase 2. That's why you have a phase 1 and a phase 2. But to say it wasn't addressed in phase 1 is not to be critical, because it's still there, and there are still things in place that both countries want to get rid of, and progress that both countries want to make. You know, so China still has plenty of incentive to come to the table for phase 2. So, you know, I think that you have to look at the deal for what it is. I think it is a deal. I think that both sides are making progress. We're moving back toward a fairer, free trade environment where China is going to meddle in the affairs of U.S. companies less, maybe not at all, in the best case, where China apparently is going to have to behave itself in the exchange markets. That's a big change.
If that's the case, right, the market has been not pounding the table, but the market was waiting for what was going to happen with the December 15th, the deadline. We're here. It looks like the tariffs are not going to be put in place on Sunday. So why aren't we seeing, you've been in the market for a long time, why aren't we seeing a more significant rally?
Well, Conway, you've been in this business for a long time, too. And you understand that markets look ahead to things. And what this, I think, is telling you is that people expected they were going to get rid of the December 15th tariffs. This is what markets expected. This deal isn't really news. People expected to get a deal like this. I don't really think it's a surprise. I think that's why. And of course, there is the question of the details. Nobody's quite sure how much Trump got, how much China got. Nobody's sure what's really there because the details aren't public.
And how much of this has to do with the fact that maybe some on Wall Street think that phase 1 was the low-hanging fruit, right? And that the real heavy lifting or the hard work is really coming in phase 2 or maybe phase whatever, however far it has to go?
Well, that may be true. I mean, like I said, the state-owned enterprises are a problem because they're organized on a local government basis, and the central government claims that it can't really control them. And the question is whether they can or they can't. And that's a more nettlesome problem that China is going to have to work out internally before they can make any deal with the U.S. about what they can deliver on that. So I think there's a question of what will happen in phase 2, but it does look like the U.S. got a lot of the things that it wanted in phase 1, and China got some of the things that it wanted, and I think that both sides can look at this and to say, hey, there's progress.
And what about the rollbacks in terms of the tariffs that the Chinese were going to put on U.S. goods? I mean, it looks like it's clear what's happening on the U.S. side, but it's not so clear on the China side, right?
That's right. It's not so clear on the China side. Yeah. We don't really know what they're doing. I would suspect that there will be at least a partial rollback because the U.S. has rolled back some of the tariffs, but I don't know it's not been specified. It's murky.
And what about the fact that the tariffs are still going to be in place? On $250 billion worth of goods, the 25% tariff is still going to be in place. Okay, so on $120 billion goods, the tariff is going to be cut in half to 7.5%. But those are still tariffs. How problematic is that for the global business community?
Live with it. I mean, that the tariffs have been there. Some of them are still going to be there. Some of them are going to be cut in half. Arguably, because China controls its exchange rate, tariffs are one way to get the Chinese exchange rate closer to where it should be. And this is the thing you have to remember is that, I'm an international economist by training, okay? So I've studied this stuff all my life, okay? And when you look at tariffs, economists are supposed to say, tariff, bad. But what's the alternative to the tariff? And if you don't have a free trade environment on the other side, then you don't have any quick way to say, well, that tariff's bad. Maybe that tariff isn't so bad. And if you're using the tariff to try to move the other side over to free trade, maybe the tariff is good. So, and this is the way it's been working. And China clearly has not been a free trader. And for the longest time, we told ourselves this story, and it wasn't really until Donald Trump got elected and started really pushing China that a lot of other people began to jump on the bandwagon too. People were afraid to call China out because they're so powerful. But the Europeans did, a lot of others did. So really, Trump just, he took a mask away from people's face about how China was acting. And so I think that the tariffs are about the only stick we have to hit them with. And so I think it's what we should do. I think it's a good thing. I'm not going to say tariffs are good, but using the tariffs for these ends to try to achieve a better ends, that's a good thing.
All right, there you have it. One view on the Phase 1 trade war. That's Robert Brusca. He is the chief economist at Fact and Opinion Economics. I'm Conway G. Gittins, and this is Reuters.